Hi everyone, and we're live. Welcome to the Zeall Show, episode 39. 39 already, where the shows are unscripted, unedited, and a lot of DeFi and crypto guests will be joining, especially like today. We have a very important lineup that we'll have in many weeks to come. But today we have a very important guest. Working with me is Catherine from Ketache. You'll be seeing her in a bit. But just one other message before we go to the show. My Leadership Digest channel for YouTube is up, as I did a video on leadership in terms of feedback in three steps. Have a look at that. It should be in my timeline. And if right after the show, I will also be sending you the link as well. So with this, let's go straight into the call. Hi everyone. Hi Kat. Hi Wayne. Hi Arthur. Nice to see you. Great. So let me do the short intro first. As everyone knows, Kat is my friend and partner in crime in so many things in crypto and DeFi in Singapore. And most important part is that she is leading on all the innovation steps in Singapore and beyond. She has a company called Ketache, which helps a lot of the DeFi companies in terms of governance and a lot of different things, which I'll let her explain. But for this show, I am her co-host as like on a monthly basis. So she'll be leading the show, and I'll be behind asking all these weird questions, so that I make sure that my normal layman viewers understand what we're talking about, as we will get into very deep topics. So Kat, I'll let you lead.
Thanks, Anson. Yeah, again, I'm very honored to co-host DeFi governance segment with you in collaboration with the Zeall show. Anson has and I go a long way back, building ecosystem for the country through Access, the industry association we're both on the board of. Anson's the chair of Access, and we really want to encourage more diverse dialogue. That's why we have these podcasts to promote asynchronous learning together. And playbacks, if anyone can't catch the live show, there's always playbacks. So why DeFi governance? At Ketache, we specialize in strategic governance solutions that are designed for ecosystem growth. So we want to make sure that, okay, how do we tackle the problem of good governance as tooling evolves in Web3, whether it's servicing DAOs or institutions. We want to make sure there's sustainable and inclusive participation, and we'll get into that from a token holder standpoint and also, of course, foundation standpoint. We look at how do we build smart frameworks for resilient financial ecosystems with open governance models in DeFi, in the broader technology landscape overall. So very happy to have our guest speakers today on the show. I want to disclose that Ketache is a advisor to FILLiquid, and here I present the founders of FILLiquid, Arthur and Wayne. Arthur, please take it away.
Yeah. Good morning, good evening, good night. It's like wherever you are. First and foremost, so thank you so much, Anson, and Cap, for doing this. Really great, to be here and also to be sharing insights, and hopefully for those who are tuning in live, also watching the replay, we're able to learn a thing or two. Hopefully, we will share deep insights, as deep as possible, and also as layman as possible, about DeFi. So just a bit of background of myself. I've been 15 years in the traditional finance. So represented. So I started my professional career as investment advisor, in pretty field of the large notable companies like in the light of Sun Hung Kai, Franklin Templeton, Aberdeen asset management. I've built a portfolio right up to 50 million American dollars in a time span of 8 years, and before I exited the portfolio. Subsequently, then from finance, I went into technology. I built 2 startup failed miserably, and the final startup I got exited, small exit. But really, that that whole experience as of building from 0 to 1 really taught me. It was such a humbling moment as really teaching me a lot as about, just not only about leadership, but really just building a product market fit as that what really the people and the users as really want. So I guess as once when you have already built something as in finance, you already have dabbles into technology, and then that's where you start realizing, okay, what's next, right? And I think that's where Web3, prior to this, Web3 is Web3 terms didn't exist, but just felt like, oh, I think blockchain is really fits the bill, because it's a thing about it, it's the whole blockchain is in crypto. It's really it's a perfect marriage between technologies and finance. And that's where I transitioned into the blockchain space since 6 years ago, just as an investor first, but really went very deep in started building projects since 4 years ago. So my first project in Web3 was really building a venture studio. And then subsequently from a venture studio did consultancy for a few projects. And right now building FILLiquid which is it's fastest growing of DeFi protocol for the Filecoin ecosystem. We'll get into the details, the nitty-gritty details about FILLiquid much later on. Over to you, Wayne.
All right, thank you, Arthur. I mean, just like always, you always have a very, amazing introductions of yourself. All right, so for myself, yeah, this is Wayne. So I'm the co-founder to FILLiquid together with Arthur as a founder, and I'm currently leading as a chief of partnerships at FILLiquid as well. So a little bit of myself here is that actually I know Catherine since 2017, way back.
Yeah.
It's almost like 8 years right now. First started in we worked together in another crypto startup, which is at the time they call Liquid, which is actually like really nice things about like FILLiquid. It's not illiquid, it's almost the same. Yeah. So and from there on, I have been into the CX and then also the Web3. As I mentioned, like I started with Liquid, which later they rebranded as FTX Japan, and then with Bybit, OKX, Immutable, and the last was with Greater Heat, which is actually focused in the Filecoin ecosystem. So most of the time, my role is actually on the community management, as well as in terms of the user growth for the platform or either for the exchange itself through the acquisition, conversions, and also retentions of the user itself. And with the past, coming from the CX and then moving into the Web3 space, right? It's actually a total difference in terms of the cultures, in terms of how we look at it. And also because when I started into the crypto space back in 2017, not as an investor initially, but as a trader looking for like a passive income. So that's what come into, learning about like Ethereum. Back in the day, it's only about like $80, and then and BTC is only about like what $1,200. So although I start early, but I didn't keep any of them because I still believe in stablecoin. So I keep a lot of stablecoins instead. Yeah. But then again, over the years right now, and then coming into different ecosystem, and it started off with so many learning about like governments as well. And I come across in the Filecoin ecosystem. That's where we together with Arthur we built this particular projects for the in terms of like lending and also the borrowing itself. Later on, definitely we will share more about what are we doing, and also in terms of like how in terms of the governments work, because today topic is also about the governments. So yeah, that's a little bit of myself. Back to you, Catherine.
Before that, can I ask one main question?
Yep.
Why Filecoin? Because I'll give you context on this. I know Filecoin has been it's made it big pre-COVID, and there were a lot of DePINs. DePIN wasn't even common back then. It was DePIN only became like very famous now and a couple of years ago. But why did you choose Filecoin rather than the other other ecosystems?
So the reason why here is that because Filecoin is a bit more different compared to others ecosystem. So other ecosystem is actually focus on like using the validators. But within the Filecoin itself, right, in order to grow the network itself, right, which is the network power growth itself, the network power, it's actually mainly or either really based on the storage provider themselves. So how does it work? It's actually the storage provider, in order to grow the network itself, right, they need to store the data into the Filecoin network itself. And with that, right, by storing the data, that's the only way you can actually to get the rewards or to mine that particular Filecoin token itself. And with that, right, the we talk about decentralized network. We talk about like decentralized data storage. So Filecoin, they already looked ahead in 5 to 10 years, because a lot of this decentralized storage, right, is actually mainly on the centralized network, which if there's anything happen to the centralized network, whether the server is actually being shut down or whether the company is actually going bust, right, your data on the centralized network itself, right, you won't able to access to it, or either you will lost. Everything will be lost because you don't have that key itself. But on the decentralized network itself, right, the data storage itself, right, because it's actually a decentralized way, any storage provider, right, they will be able to help you to retrieve the data as long you do have that particular private key itself. And that's where it's the beauty of it, that you can access to that particular data, right, any part of the world, anywhere, right, as long, unless let's say every government in the world, they shut down the server that is actually running that particular Filecoin network itself, which is not possible. I don't think this is possible, because at least there's one jurisdiction or anywhere that server is actually running, right, the network itself will continue to run itself, right?
So can I
Yeah.
ask, is this a myth that, for example, because I've been hearing for these decentralized storages, that when you try to store something, and then if it's not redundant enough, meaning it's not stored everywhere enough, if someone closes the server, would you lose some of your data? Is there still a problem for
No,
this?
it won't be a problem, because that particular set of data, right, is already on the network itself. So it doesn't matter where it's actually been, where the server is set up, because it's not stored on the server. The server is to run the network, but the data is actually already in the network itself. The data set is already in the network itself. So anywhere, if as long you have that particular key, right, you
Key.
can actually get the storage provider to help you to retrieve the data.
So it's
Wow,
not
that
about the
debunked my
soft.
myth already. Okay, I can't continue.
All right.
No worries. It's
and
not
also-
about the hardware, right? Yeah.
And also one
Yeah,
thing
so
to-
hardware, so the way here, in order, like we talk about like to store the data, right, it is a best practice here is that you need to have a like a multiple duplicate set of data just for your own copies, right? But if let's say you were to you want to store the data in the network, right, you can choose, either you just want to store like one set of data or two set of data, is up to you. It's actually just for insurance purposes, is that in case let's say you lose one of the set of data, then you can actually still can retrieve any set of data anywhere from the world as well. And that's the beauty of it, because this is actually to encourage more people, right, to store the data in the decentralized network way, and where the storage provider, they can help to do it in order for them to actually getting that particular rewards, or we call it like getting rewards from it itself. And technically, based on the conversation with most of the storage provider, at this point in time, if let's say if for a more normal retail to come in to store the data in order to mine, in order to farm that particular reward, then it may not be really profitable, unless you want to learn just how it works. Go ahead and do it. But most of the big storage provider, the big one, is actually very profitable to them. Even they were to invest in the hardware, or either in terms of this we'll call it the human resources, in order to run the network itself. So that's where I would say that if for the Filecoin itself, right, because right now, like earlier you mentioned about, there are so many DPINs right now out there, right? So all this DPIN is actually to get the data within the internet itself, to grow to grow in terms of the we call it the storage power. But then again, for Filecoin, right, it will always be the leading number one in terms of the storing that particular data into the network. So that's the reason why a lot of different DPIN trying actually to work with Filecoin to get their data, although they are DPIN, but to get their data on the network, right, to actually to be stored into the Filecoin network right now. Example, Aether has already announced on it last year. And then Solana, they also start to store the data set, the in terms of the the data from the Solana, they also like, you know, sending over to Filecoin.
Filecoin network.
Yeah,
Yeah.
to store in the Filecoin as well.
Love
So
it.
it's just a few example right now.
That's awesome. Protocol interop. Arthur, you were going to say something. Can you
Yeah.
add a bit to that and how FILLiquid fits into the whole Filecoin ecosystem?
Yeah, I think, you know, when we first started, so we knew so that we wanted to build a DeFi, you know, protocol. And essentially the reason why we wanted to build a DeFi protocol just not just for the yield making like any other DeFi protocols out there in the market. As just to echo what, you know, Wayne, you know, had spoken about. Essentially the Filecoin, you know, which operates on the proof of space time, it's just so on its own, and
So what do you
where
call it? Proof of space and time.
but proof of space time, yeah.
Proof of space time.
How does that work?
Yeah, that's very interesting.
Oh, well, so essentially, it's just to really helping, you know, the storage providers, to able, to access, you know, to Filecoin, you know, from the liquidity pools, at any point, of time. And essentially, that's really for them, to be expanding, their storage, provisioning, you know, their storage, capacity. And we wanted to build that with a real meaning of it, just going beyond than just the yields itself, but to truly really be helping storage providers to expanding their storage network. You know, so the DeFi protocol, you know, that we've built, you know, as like FILLiquid itself, you know, carries more meanings than just the yield making, but to really be supporting the storage providers. Because before a DeFi protocol existed, or before the FVMs you know, even existed in the years of 2023, early 2023, oftentimes storage providers have a lot of challenges, face a lot of challenges even access to liquidity, you know, of the Filecoin. They have to like borrow it from a centralized lender, which they have to pay exorbitant amounts of borrowing rate, which goes up to about 40%. They have to lock their Filecoin, you know, for a long period of time. And also they have to over collateralize their Filecoin, which potentially will relinquish the asset if the Filecoin price goes below than a certain level of threshold. So imagine like if you are really operating and function as a business that we're really going to disrupt you know, your entire cash flow. But you know, since then, you know, with the FVMs you know, existed you know, since March 2023, it just really opened up a whole new horizon for the SPs to able to access to you know, their Filecoin, you know, at any point in time, paying lower borrowing rate. And also, you know, what's really great for them is it's where they need not to relinquish they need not to over collateralize the assets anymore, which, you know, will potentially relinquish the asset. Yeah. So with that,
sorry, Arthur, you mean FVM, meaning just for the audiences, FVM is Filecoin virtual machine, right?
yeah, the Filecoin is a virtual machine.
So can I ask, so FILLiquid is making sure that at any point in time, anyone can have access to Filecoin, because just in case there's not enough liquidity and then therefore you can use it, or is that how it works?
Yeah, so with a DeFi like FILLiquid, now that, you know, any Filecoins holders were actually able to deposit the Filecoin. They were able to lend the Filecoins to a liquidity pool, and then they lend it to the liquidity pool, and then the storage providers which is on the borrowers. I mean, the essence of DeFi still stays the same as we have the lenders and the borrowers, right? So the borrowers is where the storage providers, and right now they were able to borrow the Filecoin, directly from the liquidity pool at any point of time, and and they were able to repay back the loan as well, directly, whenever they want to. So we give that the utmost flexibility for the storage providers to be repaying back the loan at any point of time, and which really is a lot of their inconveniences, of running the business and also sustaining the business for long term as well.
Yeah, maybe I add in a little bit here is that maybe our audience, they might not really know what is Filecoin, right? Because Filecoin, although it is really in like Ansa mentioned about like even before the COVID, there's really
Yeah,
like
it's quite OG.
right. Yeah, it's a very
Yeah.
OG token. Yeah, the white paper it came out like 2014, and then after that, it started to really go into attractions in 2017, and then by then up on 2020, then they already raised the fund. Sorry, not 2000, it's 2017 and 18. So what is Filecoin? So Filecoin, for our audience, right, is a decentralized storage network that turns cloud storage into an open market. Okay, so it allows user to rent out or to purchase the storage space on a decentralized blockchain powered network, which is on the Filecoin itself. And this is actually built on top of the IPFS, which is an interplanetary file system. So which is very important. And with that, right, it ensures secure, cost efficient. Definitely is way more cheaper than the centralized cloud storage like Google Cloud or Alibaba Cloud. And also have a censorship resistant for the data storage. So how it works in the Filecoin. So user can pay the file in the file tokens in order to store and retrieve the data. And with that, right, the storage provider will come in to offer the storage and earn the field rewards, which I mentioned earlier. And FILLiquid, we play what our part here is that because for the storage provider, right, they, in order for them to scale up their business, in order for them to store more data into Filecoin network, they need to acquire more file token. Why? Because any point in time when you were to store a data set in the Filecoin, there will be a specific pledges or collateral in the file token need to be locked. And that is actually example 1 terabyte of uh, of data that you need to store, right? You may require up to like 20,000 file token. This is just an example. So if you were to already store whatever your asset into the network, right? In order for you to store more data, how are you going to do it? Either you purchase more from the open markets using your own existing capital. But if you don't have it, then you have to borrow from institutional lender with a very high interest rate that is actually more than 15 over 20%, some even like 30%. So that is actually not, I mean, even though it is profitable, but then it's actually going to cut into your margins and your profit as well. So FILLiquid come into, we know that there is particular challenges for the storage provider. And that's where we have this liquidity pool, right? Anyone who has a file token, they can lease it, stake it at FILLiquid, and then the storage provider, they can borrow from the liquidity pool, and they need to collateralize the notes. The notes is the one that have the pledges, which I mentioned earlier, that is actually been locked to store the data. So we will, our smart contract will calculate how much available in terms of the pledges plus the rewards in the notes itself, and then they can borrow from the liquidity at one-to-ones. And then of course there will be the interest that need to be charged, and that particular interest, right, is actually between the storage provider and also the staker. That means whenever the storage provider were to make a repayment of their loan, which is a capital plus interest, right, the interest will then will be paid over to the lender directly, that is actually been staked in the pool. Any point in time when they make a redemption or either they unstake it, right, then that particular amount, right, will calculate how much they can receive from by unstaking the file token from the liquidity. So that's how it, and just now we talked about a little bit of like proof of space time, right? So proof of
Sorry, just hold your thought there.
Yeah.
I just want to address something. So I accidentally turned off, excuse me, accidentally turned off the messages for this chat, and I see a lot of your Korean community in this talk. So can I just make sure that if they want to chat, please on my pinned message, write it in the comments. And if you have questions, you can ask any of us here. Okay,
Yeah.
so just go to my my profile, which I already pinned. Go press the comments, and we will make sure to watch your questions there.
Is
Okay.
it on the YouTube or on the
On X? On X, YouTube is also on, but I think majority is actually on X. So on X, you can write in the comments. If you're on the YouTube link, then just type in the chat. I'll be watching the messages there. Okay, so continue.
I
Yeah,
was gonna
okay.
say, sorry, wait, you were talking about Filecoin tokenomics, right? When it comes to the how end users need storage, and then basically the storage providers, which are something like your validators of the network in some
Yeah.
loose sense, provides that storage. So that's the supply and demand. And because they have capital needs, as Arthur mentioned, to run their hardware providers, hardware infra, they need to go borrow. So now you're creating this true FILLiquid and a more liquid ecosystem where these storage providers can actually borrow with more flexibility. And that's where the FILLiquid tokenomics comes in. So what I'm hearing is you're tying in Filecoin tokenomics with FILLiquid tokenomics, where you're trying to create a sustainable type of revenue stream through the interest payments. Am I right? That the storage providers pay to the stakers? Yeah.
Yes, to the stakers, which is to earn the yield. For us on FILLiquid, right, we don't earn any sort of like in terms of the difference between the interest. We only going to earn the revenue via the transaction fee. And the transaction fee will be upon when the staker were to unstake, which is 0.1%. And then for the borrower, which is the storage provider, when they make the repayment,
repayment.
yeah, then there will be 1% of a transaction fee. So
Wow.
that's the revenue stream. We don't have anything like interest together.
Interest, yeah, like transaction fee on like every interest payment delivered. Okay, got it. So transaction fee based model, and that is your source for your yield, basically. Yeah.
Well, that is not the source for the yield. The yield is the interest between the storage provider payment, and then the staker will receive the yield from the interest.
Okay.
So
got it.
can I say so FILLiquid? I know you're supporting the Filecoin network, but in terms of your users, basically there's people that want to stake and have a better return, and to provide the liquidity through that. Is that right to say that?
Yes, that is a layman term. Yes.
So
right.
basically, you are assuming that Filecoin grows in terms of its usage, then so you're the guy in the middle helping with the liquidity to make sure they have access to the files.
That is correct.
Got it. Thank you.
That's your revenue model. So we actually did question 2 first.
Yeah, and also about like proof of space time, right? It's really important. We are different. I mean, Filecoin is different because it's a critical consensus mechanism that ensures storage provider. Because we talk about storage provider, they store the data in the network, right? So this proof of space time is actually the consensus mechanism that ensures the storage provider, which we call it a miner, honestly storing the data. Yeah, they claim over the time is a key component in the Filecoin decentralized storage network to design to prevent the fraud and also to maintain the integrity of the network itself. Because for storage provider, they can if let's say there's no proof of space time, right? They could be like not honestly store like a real data, or either they can actually remove the data any point in time. So how does it work? Is where this storage provider when they were to make this particular storing this set of data into the network, it will generate what we call it proof of replication. In a short form is POR reps to prove that the unique encoding, right? So with this particular this proof of replications, right, over the time, maybe every 2 weeks, every 1 month, the network will challenge the miner to prove that they still have the data. That means they prompt it, in the network saying that, oh, do you still have this data in the network itself? So they will continues to verify that there's this data in the network. So there's a coding behind where they will need to respond to it. And this is actually a random check because the miner must respond to these challenges with cryptographic proof, which is POST, right? Because if let's say we go back to Bitcoin, Bitcoin is proof of work, right? It's the mathematic calculations, right, with a formula to solve the equations in order to receive that particular mining block rewards, right? So it's turned away here around here is that in the network itself, right, they will continuously getting the miner to prove that, to ping that they still have that particular data stored in the network itself. So what happened if the miner failed to respond correctly? We talk about the pledges that they will store the data. If they didn't respond correctly, they will lose the collateral, right? They'll lose the pledges and also the storage power, which means first they lose the pledges. Second, they get the penalty. They will not be receiving the mining reward anymore. Because the mining reward, yeah.
Sorry, the pledge is their bond, something like this.
Yes,
like
it's a bond. It's like collateral.
Yeah. Okay, got it.
On the network itself.
So is this post? I'll call it post, right? That's what it proof of space and time. Post.
Yes.
Post.
So is it? Or
Okay.
is it a proof that's already out there, or you guys found a way that like it's a working thing that we can actually implement into this? Because it's interesting. I haven't heard of this before because I'm not really deep in space.
Working within the Filecoin network
Nice.
that is currently has already been running, which is to, I would say that to make sure the service provider they don't do any sort of like like cheating, or they don't do any sort of frauds. Because if there's no set up this mechanism, right, they can just put the data in and then they remove it. There's no way for you to verify anymore, right? And you still continue to get the mining reward. So you need to put a set of this particular what we call it, like a random check, that to make sure that any point of time they don't remove the data from the network itself.
So I got a question, right? Just to abstract it a little bit for end users to understand. Like, say, I remember coming across IPFS. That's one of the applications of the Filecoin ecosystem, right? Like where if I'm an art collector, I remember a lot of NFT, the NFT community, the artists, the creators, and the collectors, they were using IPFS a lot. But this was mainly in my experience with the Tezos ecosystem, but we did not somehow interact with Filecoin that much. I'm curious to know, like, how does the IPFS layer and the Filecoin layer interact? Because yeah, and how does it? Yeah, curious to know how it works. Yeah.
Okay, so I don't have a very deep technical, but this is what I understand in sense that it's a complementary protocol designed to between the IPFS and also the Filecoin itself, right? So how they relate to each other? So IPFS is a data transport layer. That means because IPFS is a peer-to-peer, all right, protocol for storing and sharing the data in a distributed network.
Yeah.
And it uses a content, which is like a content identifier. So there's a code ID that uniquely identify files by their cryptographic hash, the hash itself, to ensure the data integrity. So the file can be retrieved on the multiple nodes, right, improving the speed and redundancy. So how does Filecoin coming in? So Filecoin itself, right, it is a blockchain-based storage marketplace. So IPFS, take example, maybe I put an example here is that IPFS maybe is like a highway, right? It's a highway, right? It's very fast. Everything goes through IPFS for that particular data to be stored and also to share the data. So Filecoin, it built itself like a toll, right? You know, you go through it.
Oh, it's
Right?
the incentive layer.
Yeah, it's an incentive. It's another layer which is actually to build like a marketplace to go through, right? In one of these, on top of this IPFS,
Got it.
because well, IPFS alone doesn't guarantee a long-term storage, right? It can nodes can be deleted on the IPFS itself. The data can be deleted. So Filecoin, it put itself there where you pay the miners, that means the storage provider, to store the data reliably over the time, which means just I mentioned the proof of space time, right?
Yeah.
If you were to store the data in the Filecoin, then you need to continuously, respond to that particular random check on the network itself to make sure that the file is always there. And then they will continue pay the miner of the mining rewards until it is end of the block itself. Or either I call it like a contract time. Because when you store, right, when you store the data with the pledges, you can choose like 360 days, 520 days for the data to be stored, and then to get the mining reward until the end of that particular periods. So that is where the proof of this space time and the proof of replications coming in from the Filecoin that is actually built on top of the IPFS itself.
Got it. So when
Interesting.
it comes to IPFS as a peer-to-peer network, like how do you see is FILLiquid in that same like layer and
No,
like
Feel
yeah
FILLiquid, we remove FILLiquid from this particular equation because FILLiquid,
yeah
I put it in a way here is that FILLiquid is like a bank, right? We like
mm,
middleman. We provide liquidity. So anyone can, let's say you like a storage provider, they already mine that particular rewards. That means the money, right? Filecoin, they have the
the
money.
monies, yes.
Yeah. And then if let's say they are not storing any more data, they have a lot of asset. Where they were going to put it, either they put it on the CX to earn a very low yield.
Oh, yeah, filled bags, you mean? They're filled.
Yeah, the fill token itself, the
Okay,
reward
got it.
itself.
All
So
right.
so they can actually, so I put it just a very simple way. They can put it to the bank to earn like a fixed deposit income, right? The fixed deposit interest. And then but then again you go through the CX, the interest is really, really sad. It's like 0.1 or not even 1% for the yield itself. When you were to stake your file token in the CX, most of the CX for the file token, the yield is so sad, like no point of like staking there. So FILLiquid itself here is that because we don't fix the rates because everything is actually algorithm based on the smart contract depending on the demand and the supply. So the higher the utilization rate, which means the more that the storage provider were to borrow from the liquidity, that means they're going to pay even higher interest because you take up more from the liquidity, it's actually create more demand, right? Then it's actually going to push up the interest rate of both the borrowing, and then the borrowing of this particular interest will become the yield for the lender, which is a staker, so they can get a higher return. But then again, because how we work here is that when more lender come, because let's say the assuming let's say the interest rate, the yield is actually 15%, which is pretty attractive, right? Then you will actually going to attract different liquidity provider or either lender. They have the file token in their asset, then they can just come in, okay, stake it at FILLiquid, which actually increase the liquidity pool, and the utilization rate will drop. That means the interest rate for the borrowing will actually drop. It makes sense, right? Right now you only have 100, but you increase another 100. That means your the utilization rate of the pool, which is the borrowing itself, it decreases as well, and then it lower down the interest rate of the borrower, and the borrower will get more interest, and then that they become more interest to come and borrow from our liquidity because it's a low interest rate compared to you were to borrow from institutional lender with a high interest rate itself.
So a question for Arthur, right? How do you see FILLiquid servicing as Rin was sharing the users of FILLiquid platform, right? You have the stakers, like say I'm a retail retail user of Filecoin. I have fill bags, and then I'm like, okay, what do I do with my fill, right? And then on the other hand, you also have a more sophisticated Filecoin player, like a miner, a storage provider, sorry. And they're like, okay, I have all this fill. I also want to utilize it, or they may want to borrow more fill. Who knows? But curious, how do you service them, and how do you factor in what Wayne was mentioning about all these dynamic interest rates, based on the utilization rates that change depending on how big or small the liquidity pools are. Yeah.
Yeah. So I mean, essentially, as what Wayne say that, if you're gonna keep your Filecoins in any of the sectors, then you make really miserable yield. And essentially, if you're gonna do staking, I mean, purely just for the lenders itself, I mean, the primary consideration is it's really gonna be really to generate a higher yield. But what we did was we went beyond than just the yield making part of it. We actually make DeFi absolute sexy, so you can say. And the way how we did it was really like allowing okay, now the Filecoins holders to actually deposit the Filecoin, and then of course you're going to get yield based on the utilization rate, the demand of the borrowing from the storage providers, right? So when they deposit Filecoin, they will be getting the FIT, which is our liquid staking derivative token. And this FIT functions very uniquely in a sense of like, it's like almost one-to-one. It's like one Filecoin to one FIT. So think of it like STETH, for LIDAR,
STETH, okay.
or RE for Rocket Pool.
Right.
So where this token can be tradable, it can be it's liquid, later on, when we start going to our listing. So then after that, you were able to farm the FIT to actually be getting our governance token, which is FIG. And to spice it up even more, then you can actually now stake FIG to also earn more Filecoin through our revenue sharing model itself. And we right now very, very proud to say that we have the largest Filecoin revenue sharing. We've already completed like 13 rounds of our dividends distribution. Every round has about like 200 Filecoins. Because we share 40% of our revenue with our FIG token holder. And this is something that what really keeps our token holders to be super excited. And it's just becoming as FIG token holders it's just not only the DAO part but they are also able to earn the Filecoin, and they feel that's a huge sense of belonging with the protocol. They feel they're being part of the co-owners of the protocol, because right now it's hey, like me getting FIG, I want to earn more FIG. I'm able to accumulate more FIG, and this will be very useful for me later on, because when it goes listing, then after that, it's one FIG represents a value. But while waiting for that to happen, right now, I can stake my FIG to earn more Filecoin. And so from that angle, I think we really made this whole entire DeFi to be something very interesting. Like we say like it's a multi-token system, but a multi-token system where we truly incentivize our community a lot. We want this to be also our community project. That's not like myself or Wayne, or any of the foundation members of the project. And that this is something to me, it's really truly a game changer for the DeFi.
Interesting. Anson, do you want to?
Yeah. So then okay. Well, I was about to dive into the next topic on the governance part, but before that, so you're saying basically the yields, the calculations. If let's say demand wasn't that high, there will be interest rates up and down. It's already all calculated within the system, right? Because I was thinking, if interest rates are so high, how do you stop the vicious cycle of going higher? Because once it goes high, the confidence of people in your system might be affected. is there a way of a mechanism to control that, or do you go and talk to the community saying, hey, don't need to worry, or whatever is going on? Like how do you manage the community basically when things go, when the interest rate starts spiking?
The interest rate spiking probably it will be for the storage provider. That because it's good for the community who are the staker, right? Because you earn the yield. So that will be for the storage provider concern because they don't want to borrow at the interest rate that is going to be very high. So
I see.
the way that we build it here is that because it's a very dynamic interest through the smart contract. So when that particular interest rate, which is the borrowing rate, is high, let's say at 15-20%, between 50 to 20%, that utilization rate could be already over 80%. And that is going to attract the counterparty, which is like yourself, myself, who are the lender, the staker, because say, hey, the interest rate is high right now. I mean, for the yield for me to stake the FILE token, then I will come in. I will come in to stake more token to increase the liquidity into the pool. When that happen, the interest rate, the borrowing rates for the borrower of the storage provider, it will drop. It will drop down because the pool increase. So the utilization rate is actually decreased as well.
Nice. Okay, understood.
And we also have this protection mechanisms as well. The more once when it reaches at 90%, it will also discourage the lenders to be also liquidating their
Unstake, unstake the token.
Yeah, from the liquidity pools by actually affecting the FIT value. So that is being said, then that will actually discourage them from unstake their Filecoin directly from the liquidity pool, and that's to really sustain the entire interest in that. So the protection mechanism comes also very handily for both for the storage provider and also the stakers as well, as form of like balancing.
Yeah. So to add on what Arthur mentioned about this over 90% of utilization, which means the high interest rate, right? One is actually to attract more staker coming in. Another one here is that, well, I already stayed for quite some time. Oh, the interest rate right now is so high, which means if I were to unstake right now, I earn more, right? I will get more. So I might be trying to unstake my token from the liquidity so that I can get the yield as soon as possible. However, when it's actually more than 90%, right? So anyone who going to unstake at the over 90% utilization, that means a high interest yield, withdrawal become or unstake become more expensive. So redeeming of the FILE token, which it will cost more. As example, right now, when you stake the FILE token, you will receive the LSD, which is the liquid staking derivative token. So when you were to unstake, that means you need to redeem the FILE token using the FIT. So it will cost more FIT to receive back your FILE token. Assuming, let's say, when you stake it, you get like 1-to-1, right? And then but then again, when you unstake it, right, it become like 2-to-1, which is actually you're going to lose more, right? But you get more interest, but you get less FILE token back from the liquidity. So that is actually the mechanism from the smart contract that is been built. One is to discourage people to unstake right away after they earn a lot of yield from it.
Great.
So they're more incentivized on the staker side to stay locked in.
To stay
Because of
locked in more, and then when the utilization rate like drop lower, like because there's weather coming in, right, to take it more. So it's like it's like pulling between, like one side is I want to have high interest yield, another side I want to have a low interest rates for borrowing. So whoever like putting in more, then the other side will benefit more.
Yeah.
Great. Let's dive into the
governance.
Yeah.
Oh, yeah.
So
Tokens.
how does I guess Kek has a lot of questions on that, but how does it work? I know we've with Kat we've discussed many things like for example, one of the previous episodes, I actually got enlightened that in DeFi, governance is actually improving very quickly because when it's open source, everyone has a voice. It's because everyone has a voice giving feedback, it improves. Whereas if you talk about governance in centralized entities, in licensed entities, you're waiting for either news from the regulator, but only a few people discussing it. But from your side, and any thoughts in terms of governance, any challenges that you have faced, or some of the governance issues that you don't have solutions on? It's an open question. You can just, whatever thoughts come out.
So yeah, maybe let me start first. So maybe you see, here's the thing: it's really gonna be a chicken and egg kind of thing. The way how I see it, yeah. I mean, in my heart, it's where we built the governance part of it. It's to essentially building for the community, and the community has a voice for that. In fact, like becoming a governance token holder, they become a part of the co-owners the protocol. They were able to provide thoughts on like our systems parameters, even like giving advice on how our roadmaps to be improved, or what sort of features to be integrated, and then we need to do that voting part, to ensure that whether this action can be taken. But in reality, so here's the part that where it also really collides with like what's really out there in the reality, that where I also believe that at the same time, too often that the DeFi governance are also, most of the protocols out there, they are also often controlled by a lot by the whales and the VC funds as well. Like here is where I'm still trying to fix my thoughts here because DeFi promotes the whole narrative of this decentralization, right? But most of these DAOs, governance systems are absolutely fully controlled by all these large field token holders like insiders, VCs and whales. And this is where like most of the DeFi governance proposals will get approved by just a handful of wallets, rather than just a very wide, broad community itself. So I think this is where it becomes a true problem, because decentralized now becomes a whole entire illusion when major decisions are just made by like early investors instead of actual users. And this is something that what FILLiquid really want to solve it. And because the fact that we have a genuine community, followers, stakers, because if this really continues, then in short term, I think profit driven will just be dominating rather than just its protocols longevity. And in the long run, I also feel like the retail governance becomes so ineffective because most users just lack of incentive or expertise to participate, or they do not know how to begin with. So we also take certain actions of like promoting more be part of our FIG token holder, becoming part of FIG token holder. You have a say, you have a voice, of how to grow FILLiquid together.
I have a quick question. So if I'm say hold a fake token holder, and I stake my fake to get part of the dividends in Fill, does that still allow me to vote, submit proposals and vote?
Yeah.
Can I do like two things at the same time? Because there were some governance tokens that if you stake, that's it. You cannot do any other like activities if you've engaged in one DeFi activity. Yeah, something like that.
Yeah, you can. Yeah, you can. So yeah. So that whole sticking of our FIGs, it's our of our additional reward for our governance token holder, that where they were able to earn more Filecoins itself. And of course, I mean, at this point in time right now, they also see that value of Filecoin, and they want to, or Filecoin enthusiasts they want to keep as much Filecoin as possible. So hence they are also accumulating more FIG tokens to grow, their Filecoins portfolios as well. Yeah.
Okay, very cool. So you get to do multiple things at once with the governance token, which is good. For both a DeFi and governance perspective baked in. And I wanted to ask a little bit more because I'm very mindful of time, and I know that Wayne, you have to jump. I know that FILLiquid has been active in Filecoin's governance mechanisms, namely the retro public goods funding rounds. I know you participated in both rounds. Can you share a little bit, maybe Wayne, from your perspective? Because I know you're a badge holder as well, which means that enables you to vote at the RetroPGF on what projects deserve grants and funding. Yeah, public goods funding. Yeah.
Yeah. So the let for the audience, what let's tell them what is retroactive public goods funding. So retroactive public good funding is actually initiative in Filecoin right now. A government's experience that reward contributions after the projects or maybe the company, they have already demonstrated a value in the network itself. So this is a major shift from like a traditional grant funding. A grant funding is you were to submit a proposal, and then they will look at your milestone, and then they will give you the next like tranches of the funding, right? That means you hit the necessary data, right? Where the capital is provided either upfront or either based on milestone. But for retro PGF, right? So in Filecoin we call it Fill Retro PGF. So it's actually look at your past 6 months of your contributions in the Filecoin ecosystem. Whether it's actually there are several what we call it like this category. Example, infrastructures or toolings and utilities, governments and then education and tech, and then product or UX. So this is a few of the criteria for people or for projects to come into the Filecoin to showcase, to provide the data for the past 6 months, what have they been contributing to the ecosystem or either to the network itself. So that's so Fill Retro PGF first round was started on 2024 April. That is actually looking back into the past 6 months, starting from October 2023 until March 2024. So yes, I was being selected as one of the first back holders or either the voters. And how this selection is actually they base the back holders is actually been nominated by the sponsor or either the founder. So in the first round, the sponsor or the major funder is Filecoin Foundation, Protocol Labs, Web3 Mind, and Titan Networks. Again, based on the size of the funding, right, or either the sponsorship by them, right, they will going to nominate those back holders that will be selected based on their expertise, based on their contributions in the ecosystem, and also based on also, let's say, whether they have a necessary knowledge about the Filecoin ecosystem itself. And all this funding decision, right, is actually recorded transparently on chain. That means, they move the fund into one single wallet, and then after that, it will be distributed to anyone who received that particular funding. That means they have been voted. So how it's actually been voted? The project itself, right, on the first round of the PGF, right, is about, let me think, it's about 100, if I'm not mistaken, it's about 144 submissions in the first round, 144. Oh, sorry, 132. I just look at the stake. 132 project was being submitted for the nomination that is actually eligible for the voting. And then 224,000 file token was being allocated. And from the 132, 99 project was being granted the rewards. 99 projects.
Oh, very high rate.
Not, quite high. But then again, not everyone receive a very high rewards
Oh,
because
because you're
Oh,
distributed.
okay.
yeah.
Because it looks like the
So
attraction that you
yes,
had.
you look at the traction. So how it works here is that the back holder like myself, we will review each of their past contribution, the stakes, or either in the GitHub codes, how many in terms of their repos, in terms of the coding. If let's say they talk about like contribution to the staking and lending, how many wallet is actually for the past 6 months has already done the staking itself, and then what is the TVL. So all this a lot of angle because I was being nominated for the first round. It's actually pretty new. So everyone was like back among ourselves was discussing how we need to, because there's no set of guidelines, rules that how we want to give the vote. So we had to discuss because I'm not very technical savvy in terms of certain of the GitHub looking at the code. So I have to rely on the information that was being provided by other back holder and then making my own decisions, right, based on the information and then review it further. It take a lot of time, like almost like 90 hours to really complete all the voting itself.
90?
90, I took about 90
Wow, a
hours.
Wow.
lot of
Yeah,
work.
because
We should
132 project,
incentivize you with lots of field.
yeah, they no, they don't incentivize the back holders. The volunteer basis.
Got it.
So
Yeah.
so how it works here is that for the first round, right, is there will be 100 votes allocated to each of the back holders. Each of the project maximum can only get 16 votes. And in order to qualify to get the rewards, right, they need to meet the minimum of 5 quadrants. That means 5 back holders,
Five.
right?
Okay.
5 back holders votes. And
For
maximum
core.
from
Okay.
back holders, they only can cast a vote of 16 vote for one project. So maximum is 16. Minimum is no minimum. You can vote 0, and then it's still considered that it qualified, which is weird for the first round. Like I give you 0 votes, but it actually qualified the quadrants.
Oh,
Interesting. Okay.
Interesting,
like
but
you're
that's a
there, but you don't
first
say
round.
anything.
Yeah, although so the vote it could be expressed that
Okay.
project should not be funded, or either I think the project should be funded, but I don't want to give you the votes. But then again, why? Because when you reach the minimum of 5 quadrants, the number of the votes, right, will be calculated uh, together with the total of all votes, and then they will look at the the average, like each of the project will actually receive how many votes, and then that is actually impact of your to receive how many funding or either the grants, sorry, not grant, the reward they will be getting. So that's the reason why here is that although there's a 99 projects, but then again, some of them only get less than hundreds of the field tokens, right? And the highest for the first round, I remember it was like 4,000 plus token only, 4,000 plus token out of the like 224. So each of the average of the project, right, they don't really get a high in terms of the rewards itself because this is actually the first round. So a lot of like tests, test
Yeah,
A/B that we need to
experiments.
go through. And then
Mm.
coming into the second round, which is on last year, 2024 November. So it ran through for the past 6 months again, like from April to October of your contributions to the ecosystem. So this time we have about 155 projects eligible for the voting. 270,000 field is being allocated, which is
Mm.
based on the highest price of the field token at the time is about like almost $1.7 million, total 1.7
1.7. Okay.
million dollar. And
Mm.
then 97 project was being granted the rewards. So and with the 97 of projects, right, for this round is a bit different. So the vote is actually based on the 270,000 of the rewards. That means each of the back holder, you have 270,000 votes, and that equivalent to 270,000 funding. Assuming you are the funder, you had 270,000. And then each of the project maximum can only get 40,000 votes. That means let's say you think that this project is deserve to get $40,000, right? So, and then the quadrant for it, right, is actually 6 instead of 5. And right now, zero vote means 0 vote. It doesn't hit the quadrants. Means that
They change.
yeah, they change it. So
Yeah.
it if the project gets 0 votes, then you won't hit the quadrant. So you need to hit at least 6 quadrants in order to be eligible for the fund to be distributed. And with that, right now, because we already got the experience for the first round, so everything is a bit more clearer. And with that, the top five, the top five, most of them getting more than 7,000 field tokens as a rewards. And then the highest for one project, they got 14,600 tokens for field tokens, which is pretty high, more than $100,000 for that one particular round. And FILLiquid, we in both round, for the first round we got 3,229 field tokens, and then the second round we got 3,344. I mean, there's an increase of a little bit of this like rewards that-
10K.
Each Filecoin the field token is $3 right now.
Right now it's
Interesting.
$3.
Yeah.
Yeah. At the higher was about $8. Yeah. But then they only distributed in the first round they distributed right away after
Right,
like
okay.
2 months, after 2 months, because they need to do a lot of verification with the funder as well to make sure that everything KYC, and then the whole amount was being distributed. But for the second round, what they did here is that they go through what we call it a drip. That means this particular drip, right? It will be claimable after every day. They will, assuming let's say you get 1,000, right? But it will be distributed to this particular wallet that you can claim every single day until the 30 days, right? Not they don't allow you to claim everything. So you need to
Why,
either
yeah?
on daily basis. To be honest, we asked about it, but there's no right answer or wrong answer for it. The right answer maybe is that, well, because they
Really
want
want
to,
price to go up.
wait for the fund to go up. Who knows?
Or
Or
maybe they want
either,
to manage the
or either to
liquidity
manage the selling pressure, or we don't know as well. Yeah.
Oh.
So right now we will be going into next month, April. It will be the third round. Currently it's still in preparations, and then there will be new selections of the back holders. So interesting, the stake here is that for the first round, right? There's about more than 30 back holder was being selected, but only 25 back holder cast their votes. That means there's about like almost like 10 of them didn't cast their votes. We don't know why. Either they have no time, or because it take a lot of time to review everything. And then for the second round, we have like 36 back holders. Almost everyone cast the votes. Almost everyone. I think like only two person didn't cast the votes. Yeah.
Interesting.
So second round is more
Active.
more is more in the there's more clearer in terms of how we reveal it and how we actually vote for the votes itself. And the third round itself, hopefully I will get to be nominated again, because it's actually based on the nomination by the foundations, the Filecoin Foundation, as well as the protocol acts itself.
Interesting.
Wishing you
Actually,
all the
participation
best.
sounds quite high, like for the people that's supposed to, and then actually go and fulfill the votes.
Yes, that's right. Because the thing is that for the second round here, right, 270,000, there's no minimum like sort of like requirement of how many vote you can cast, but zero is zero. So we do have a meeting here is that they expect like the minimum vote is at least at least like 175 for that project to receive the funding in order, even they were to reach a quadrant. So some of the project, I review it. I think they deserve it. Although I don't give them zero, but I will just give them the minimum vote, like 200 votes. Yeah.
Okay, got
And
it.
one more thing, backholder cannot vote for the project. They are either,
You're a part of.
they're part of project directly or indirectly.
Well,
So
that's
you
good.
abstain from
That's conflict of
voting for
interest.
FILLiquid.
Yeah. So it's a complete interest. I mean, we need to declare our like which project that we are involved in before we cast any vote as well.
But the one thing that I really like about this RetroPGF as an initiative, as this mirrors as the optimism, RetroPGF model, right?
That's
Where
right.
governance,
Mm.
shifting towards as a merit-based, funding for projects as that where it brings impact as to the ecosystem. But the way how I see it is it's such a progressive action that's taken as about Filecoin, because this is also a very clear indicator that Filecoin itself it's now moving towards a community-led governance, from how it was initially operated as under like a core developer centric foundation led governance model. And this is something that I see one of the biggest takeaway, and the fact that FILLiquid became one of the recipient, it also strengthens the testament that where FILLiquid as a DeFi, it shapes the entire Filecoin ecosystem, like growing the community in a robust way, strengthening the storage economy with liquid staking, and essentially it's also validation for us to know that we are doing something to just grow the Filecoin to be much stronger and more robust moving forward.
Yeah, that perfectly answers my question, because I was going to ask you, like, how does the Filecoin governance mechanism with RetroPGF impact FILLiquid? And do you feel like there ought to be any improvements to the RetroPGF, Arthur, or like you're happy to continue participating in the next round, hopefully?
Yeah, I mean, it's really a testament to our hard work, the initiative that we have taken, and because from the definition itself, like it's a public goods funding, and how much goods we have, how much public goodness that we have done, for the ecosystem through either our marketing effort, our outreach, or offline, our community buildings, action plans. And all this is become a validation of us knowing that Filecoin rectify it and understanding that how pivotal a DeFi plays that specific roles in shaping the Filecoin ecosystem. Because right from the very beginning, as you all know that FILLiquid is one of the DeFi protocols. It's truly just to enhance the fill liquidity through DeFi, because historically before DeFi ever existed as Filecoin liquidity was really heavily very restricted, and then it also really helps the storage economy right now that for storage onboarding, helping to ensure the SPs were able to scale their storage more efficiently, and then it's also bringing in other community into Filecoin, getting aware with Filecoin, like through our features of like cross-chain bridge, our cross-chain expansion which is in the pipeline as well. And that is also creating awareness from other communities from a different chain, from a different network, to know about Filecoin. And this really, the way how I see it, this really, I see like a converge, governance DeFi enables Filecoin, that where it will shift towards a fully decentralized treasury management.
Very cool. Yes, very exciting governance innovation here happening within the Filecoin ecosystem, both from a foundation lens and also from an ecosystem project lens, like FILLiquid. I think with that, like now I'm also very tempted whether can we actually submit this show as a PGF, RetroPGF for Filecoin, because this is talking all about Filecoin, right? But yeah, Rain's like nodding. Yes, yes. Okay. I hope.
Yeah, this is interesting.
Yeah, it is considered education,
Because I really like this idea that you have traction, then you get the amounts. So if you have very little traction, then you get smaller amounts, and this way, then it's not the subjectivity won't be there. Like you say, oh, because I like this guy, I want to give them more. No, we just look at numbers. I think this is a very good way, and people should really push this method for to grow any sort of ecosystem. It's awesome.
Okay, so I think with that we are actually at time, 15 minutes over time. I know Wayne, you have to jump. Thank you so much, Arthur, Wayne, Anson, for like coming on the show together and doing the show together. I definitely learned a lot about Filecoin, even though I worked initially as on an advisory capacity, but like this kind of conversation this dialogue actually is a really good deep dive into how the tokenomics of FILLiquid and Filecoin work together cohesively. Anson, do you have anything to add?
Yes, so we really have like 1 in 4 of this whole show right now are your whole Korean community members. Do you have any word last before we end the show? Have some words for them?
감사합니다. Thank you for joining us today. As a
for Korean
house.
community, okay, yeah, they are super vibrant, they're super excited. Yes, stay tuned again with our community call tomorrow. That where it's going to be some big announcement is it's going to be announced. So you know the time, you know what's going to happen. Like if you're not, then just stay connected through our X and also our Telegram as well. I know our Telegram is our current community is it's really really vibrant, so they just can't wait for the big news to happen. So yeah, stay tuned. Wouldn't want to give you too much of a teaser. Don't want to be a spoiler for what's going to happen tomorrow. But tomorrow's community call, I assure you, it's going to be exciting for all of you guys.
Wow, you make me want to join that call too.
Yeah, it's on X, right?
Yeah.
Is it on X or Discord?
It's on the Discord community. Discord call. Yeah.
Okay.
Yeah.
Great. So thank you, Wayne. Thank you, Arthur, so much, and thanks, Kat, for this. So also, I have one last message for because it's recorded here for my Access members. We're going to reach out to each one of you to do a call. It will be a Zeall show Access collab. We can say I haven't really nailed it down. We'll deal with the details later, so that we can actually get you guys more profiled. Right now, we are the top live stream in this. Actually, if I'm right, it should be right now in the world right now, because the live streams in the US is all stuff together into the live on X, from what I understand. But we are right now at the top, and thanks for all the community. So if you guys want to join, please, I'm happy to do it in this similar time as well on a Thursday our time. So great. So FILLiquid, if you guys are not members, please do join. So
join the community.
Yes. So what my main aim for this show is really to address a lot of the either telling people the different crypto challenges, promoting about why Bitcoin now needs to be everyone have like $10, $20, $100 worth of Bitcoin, because it's getting very centralized. Right, but so this whole show is really for the community, and yes, I thank you guys again. I will be making sure that more of these clips will be also sent to you guys. For anyone that also wants to join the show, they will have the same as well. So okay, thank you so much. So I will see you at the next episode for the Zeall show. Thank you, everyone.
Thank you, everyone.
Thank you.
Thanks,
Bye.
Thanks.
Bye.
Bye. See you.
Good, very good. Okay, stop now. Are you guys all off?